All right, good morning, fellas. We are live. Hold on, let me just get this started on Instagram over here. And let's see. How come it's not starting? Hold on. Uh, there we go. Okay, we are live on all platforms now. So we got Tony, Fireman Flip, Denzel, and Matt, the Mojo Mindset. Morning, fellas.
Good morning.
Hey, good
Morning.
morning. What's going on?
Yeah, so Denzel, Matt, been on here before. Tony's first time. I just interviewed him recently. So, Tony, why don't you give a quick, maybe background story of you, like a 30-second background, who you are, where you're at, and maybe your portfolio.
Gotcha. Full-time firefighter, Cincinnati, Ohio. Been there for about 12 years. Just got into real estate about 2 years. Just got my fifth. I'm doing about to start a rehab project now. Actually, I'm gonna hopefully be doing two rehab projects at the same time. So this will be number five for me. And kind of into the shared living, single room rentals is kind of my niche.
Cool. Awesome. Yeah. So if anyone wants to know more, go check out my channel. And Tony's interview with me is up there live right now. So go check it out.
Perfect.
But let's kind of maybe start this topic off. There's a lot of stuff going on right now, like California. The wildfires. I think people's concern, with their homes, insurance, all the hazards. So maybe we can talk about maybe in our markets, or maybe what kind of concerns you guys have with insurance, or possible hazards that you look for in certain markets that you invest in. So maybe Matt, you can start off because I think your market might have the biggest insurance problems.
Yeah, for sure. So, just to kind of keep the audience in the loop, right here in New Orleans, so major flood zone, flood risk area. Also have the two properties in Florida, kind of on the Panhandle, right outside Pensacola. So, insurance is certainly a big factor in how that plays when you're underwriting or analyzing a deal. And in just our experience, what we've seen is insurance has significantly increased. So, I think we have a triplex here, and even our homeowners insurance with Airbnb in the bottom. That insurance that first year was quoted just around 5,000 or 5,100. The next year we go to re-up the policy, and it's up to 8,400, and that's just in 1 year. Granted, um, there was significantly some, I believe it was like hurricane, either Ian or one of the, like Sandy kind of came through. Sandy was actually in Pensacola, but at any rate, with these kind of occurrences of hurricanes, right? These insurance companies are doing their best to kind of hedge that risk profile, and so the third year we got a quote over, basically over, it was like over 10 grand, right? And so to go from 5 to 10 grand in just a span of 2 years, if you're not conservatively underwriting your deals, right, it's quick how insurance can kind of put you behind the eight ball. So thankfully, right, with we got a local insurance policy here in New Orleans, but thankfully, being active duty military, we have the benefit of reaching out to USAA, and they were able to kind of work with us and create a better price pointed insurance that got between that 5 and 6,000 range. So I mean that's like a $4,000 delta in just 1 year. And unfortunately, with the rates and the trend that insurances are going, it's hard to imagine that they're going to be kind of reducing their policies anytime soon. So that's just kind of our quick synopsis. And obviously, being in an elevation where it's basically below sea level, right? I mean, your flood insurance is it's gonna be costly. So um, those are kind of a couple experiences that we've had thus far.
Yeah, I just want to say morning to Brett, fireman in Wisconsin. So Tony, that would be a good guy to connect with too. Brett's doing some cool stuff out there, so go check him. I think he's only mainly. Oh no, he's on Instagram also, but he's also on Facebook. He's also in the first responder um, group on
Okay.
Facebook. But yeah,
Nice.
go check him out. And we got Lexi stopping in, probably from Matt's channel. I see it paired here, so morning. But Denzel, I know you. Why are you all so gay? Thanks. But Denzel, I know you also just had a fire recently, correct?
Yeah,
So, as far as insurance, is that something that woke you up as far as looking over your insurance policy and other concerns there?
so yeah, Mark, for your audience, yeah, I just got through a fire on my duplex um, about 5 or 6 months ago in June. So yeah, I definitely, especially first starting off, it was my first property. Still, now I'm so basically, I like to explain like the setup. So basically, I have a main dwelling in the front, and then I have a carriage house or a mother-in-law suite in the back. And I was renting out the mother-in-law suite in the back. Well, I was living there in the mother-in-law suite in the back, and I was renting out my main house because I was getting my rent there. So basically, I had got a new insurance policy because I made sure, I told my agent, my setup, said, hey, look, I was living in the mother-in-law suite, and I was renting out the main house. Well, on my insurance policy, he didn't write it that way, and he written it to the point where he said I lived in the main house and I was renting out the back, right? So when my fire happened,
Mhm.
um, my insurance adjuster looked at it and like, hey, look, this says you live in the main out the back. I said, no, that's not accurate, right? So they were not even trying to get me coverage. So I was about to get really stuck with not being able to get paid for to rebuild, right? So they was looking at it as a garage and saying, hey, look, we just want to give you 30 grand to build the garage. So that's the one first thing, right? Where you basically just looking over your policy, making sure that it's written correctly, making sure that they, especially if you're doing this strategy of house hacking or you're doing something like that, make sure that the insurance company know your setup and what you're doing, right? They know what unit that you're living into, right? Because at the end of the day, once they're looking to not pay you. Unfortunately, they look for any reason to not pay you. They're looking if you're doing something illegal or fraud or whatever, or even if you're doing something illegal, they're looking to not pay you. So me, in a situation, I had to basically, luckily, I was able to, have all my tax returns. I had all my prior leases saved to my computer, so having a good, having your stuff organized as well. Had my license. I just renewed my license. I had all my stuff that said I lived in apartment 2 instead of apartment 1. I had to issue out that to my insurance company. They had to do like a whole deep dive into all my history and all of those things, and they basically agreed to give like a one-time exception because the agent actually made a mistake in this manner because I was showed to prove that he made a mistake, and then they end up covering the cost of my rebuild. But looking at that too, and then looking at just not also going to like the cheapest quote that you get, right? Because a lot of these agents, or because I usually use insurance brokers and such, or so where I go, I try to stay away from the bigger companies, but everyone wants your business, right? And everybody's good to you to get your business, so they try to give you the lowest quote. So it's important to look at that dwelling coverage, see what your replacement cost is on your rentals, or just all of that because we was underinsured too, right? So I wasn't able. I am in the current stage of rebuilding, but I'm doing it a little bit different. So my place behind me was like a 3 bedroom, 1 bathroom. Now it's going to be like a 2 car garage with an apartment on top of it, which is still good because now I'll give my property some parking. But at the end of the day, I had to be real creative when it came to that because I wasn't able to rebuild the same structure I had because I was underinsured. When inflation being the way it is and home prices being so, you can get a quote this year and think, oh yeah, this is enough to rebuild my house. And then next year it went up, 20, 30 grand just to rebuild. So you want to look at those policies every year, making sure that you have enough coverage to build, see what the market is, because, a lot of, you get these insurance packets, they were 50 to 100 pages sometimes. You're not reading through all of that. You're not seeing all your coverages. You're like, oh, yep. Like you just said, Matt. Oh, I'm saving 4 or 6 grand. This is better than the 10 grand. This is what I'm taking. I can cash flow off this. This is where you're going. But sometimes you got to make sure that the numbers make sense too. And so sometimes it may make sense to get a higher quote if it's giving you more dwelling coverage, because if not, you're going to be stuck underwater, on a property. So that's my you know 2 cents with the insurance.
Yeah, we can dig into that a little bit more, but there's a question for Tony from Trade Better 99. Harrison is in Virginia, and he invests out of state in Ohio. So Tony, he said he loved the video, but how does your insurance feel about rent by room?
I've been pretty open with that. I know a lot of like a lot of the people in certain groups were talking about like you don't need to share that with your insurance, but I've been pretty open with my insurance company about what I'm doing. I haven't had much pushback when it comes to renting by the room because a lot of times they still have that, you know, 5 unrelated people per building code. So I'm not doing anything illegal. Once you get into like more than that, then that's, you know, it comes into like, you know, building permits and all the, you know, zoning, and then it's a different kind of insurance, it seems like, from what I'm hearing. But I'm staying under that for now. But I am starting to kind of deep dive into more of my insurance. I was that guy that, you know, got the cheapest coverage, and I'm super unorganized, so I couldn't even find my insurance policies when I was looking the other day. So I started kind of you know, really getting better at like putting things in files and like actually starting to look at like what kind of coverage I have, as we did kind of have a close call with one of our guys were cooking, and he kind of freaked out. We got most of our guys are just kind of a background homeless or coming from a homeless shelter, a lot of mental issues, a lot of kind of instability. So he kind of freaked out, even though we had kind of a fire extinguisher back. He just like froze, and I'm watching it on camera. He's just like freezing, you know what I mean? So luckily enough, one of the guys were able to put it out, but that kind of gave me the like, hey, I need to really start to kind of deep dive into
Yeah.
what we got going on. And I do some subleasing too, which then kind of I have to lean on the actual owner of the subleases that I am renting from. So I'm looking at now getting a separate policy from the actual owner's policy. So that's kind of my thing this year, is really deep down into insurance.
And Tony, that's good that you're finally starting to look into it. One thing, make sure if you don't have it on your homeowners insurance policies, it is endorsements that you can put on there. Like if you like Airbnb in or something like that, some insurance companies have that endorsement that you can add on there. I would just do it. Just, it might be, you know, I might pay a couple of extra $100, but I would probably just do it just to have the
Okay.
extra protection, just to be like, okay, I'm trying to do everything in my power to cover myself because, you know, again, you know, obviously renting out to others that could be risky as far as just, you know, people and what they do. You know, it's just crazy. So I just want to make sure you're protected and covered fully with that.
Yeah. Tony, do you require them to have a like a renter's insurance and then name you as additionally insured on the
Yeah.
policy?
So we don't. That's again, that's kind of one of the things that I started kind of looking into. But no, we don't at the current moment. We don't.
Yeah, that's a good idea to do too. So they list you on a policy because I guess when you do that, you know, your insurance company will go after their insurance company for the damages if they did something before prior to coming for you. You know what I mean?
Gotcha.
Yeah.
So Denzel, I know, like I said, you know, you did have that fire recently.
Yeah.
You know, like building and stuff. I think that's, you know, these California wildfires are also gonna make people start looking at as far as what the process is if they had to rebuild a home,
Yeah.
or the issues that they might challenge going down that route. So has it been a struggle for you to rebuild or get the permitting in your
Uh,
market?
Luckily, my city, you know, because I live in a smaller city, so in Metro Detroit, and you know, luckily they've been a blessing to work with as far as getting permits and stuff like that. The process can be very long and tedious. I mean, it's only been 6 months for me. Usually, you know, luckily I have my main house to live in. That's where I'm at now. So that I'm blessed to even have that because some people may be out of a house, like you said, you know, for years to come, and have to, you know, stay somewhere else or, you know, have an apartment or whatever. So I'm lucky to still have this house and actually be in a bigger space. But with that being said, it's a long process. I mean, starting off as far as, you know, finding the correct builder, right? Finding a builder that, you know, is good to work with, as, you know, have their own insurance and, you know, that's got a good reputation. And then after that, going to get your architectural plans done. That could take a long time too. So, you know, for me, have to go back and forth with the city. Like, okay, we can do this, but we can't do that. Or we looking to have this here. We're not able to have that there. So then, going through the architectural plan phase, right? And then getting those plans, getting them submitted with the city. So everything has been like maybe a week or two turnaround every time. Like, for example, when I'm running to things every day right here, I'm again in Michigan, snow here. So now my framers are not able to be out. I mean, we got like next week is like 6 degrees outside, right? So they're not going to be out there working. So we did, dealing with like weather constraints. And then we just realized the footings were a little bit too narrow. So now now I'm actually in the process of going back to the drawing board, plan on hearing from architect later, and then we basically redid the plan again, and I got to get them resubmitted to the city. So it's so many things that's like you going through step by step. It's a very stressful process. It's been a very I've learned a lot through this process. I believe at this point I probably can go and build my own house now, but for sure it's one of those situations where it is for those people in California, and they 10,000 houses, 30,000 square feet houses. This is going to be a long upbuild, to even build some of those big mansions again, or just for the regular people that live out there too. It's going to be permit, especially out here, permitting in California is like crazy. And some of those houses was grandfathered in, especially in the Malibu area. They pay that, who knows if they're gonna be allowed to build or not. So it's just a mess in California. But again, I'm blessed to have this front house to be able to manage the project in the back. So it's cool.
Do you have to is insurance, as far as you got to run everything through the insurance company also, or is it kind of like you get the money and now you
Yeah.
just kind of handle everything?
Yeah. So, and that's another thing. That's good that you pointed that out, because before this, you think that, okay, especially if you have mortgages on your property, it's different. And even with that being said, it may be different what insurance may require. So, for example, the insurance company, they ended up, paying me out because my property was a total loss, right? And again, it was the estimate to rebuild was a lot more for me to more than what I was covered for. So I'm actually coming out of pocket to uh, the substantial amounts to even build what I'm building back here, but I'll get my money back. I did the numbers, but I'm coming out of pocket to even do that. But what happens is they give you a check. They say, hey, here, especially if it's a total loss or not. They say, here, your property's a total loss. We want to give you the actual cash value of your property. They gave it to me. And then what happens is you get that check and you realize it just don't have your name on it. It has your mortgage company name on it, right? So what you have to do is you have to sign a check, overnight that check to the mortgage company, and then they manage the rebuild, right? So basically, now in your policy you may have things like it's code upgrades and stuff they pay additional for. So for example, my house is 100 years old, so it's different codes and things that they may have. So they might give you some money on top of what they gave you for code upgrades or for demolition, because they know the city won't want an abandoned structure there, so they give you extra money on top of that. It just depends on what you have in your policy. But basically, once you get that check, it goes to the mortgage company, and then they manage to rebuild because they have an interest in your property. So you got a couple choices, right? Like, for example, my thought was like, okay, because at first I wasn't going to rebuild. So I was just going to be like, okay, let's just, I'll just make a garage and I'll take the money and I'll go and reinvest it myself. Nope. They won't want you. They don't let you to do that. And then they're like, I'm like, okay. So I had to get creative. I had to get some plans, give it to them first, see if they would allow me to do it. And they allowed me to do it because luckily my property still held its value without my carriage house in the back anyway. So what I owed on the property and what it was currently worth, it still held its value. So I got an appraisal to show that, and they're like, oh well, it was still owed that, because honestly, what your mortgage company care about is that the property is still worth what it is with the damage of the property. If so they want you to use that money to repair, and you can't use it for anything else unless you want to pay the property off. But then you have to come up with the additional funds to complete that. You can't just put it towards your mortgage, because that was my next thought. I'm like, okay, well, let me just take this money, put it towards my mortgage, and then my house is almost paid off, and I got like a $20,000 property, and I can pay that off. No, as they won't let you do that either unless you pay the whole mortgage. I was just going to do that and refinance with a $20,000 loan, but they wouldn't let me do that either. So I'm like, okay, well, now I have to rebuild. So I basically really didn't have a choice to come out of pocket, or if not, that money sit in the escrow account and it doesn't move. So if you don't use that money to rebuild, you can't do it. So I had to rebuild. And but yeah, so then at that point, then you have to schedule with them for an inspection. They come out and they give you draws, so you don't get it all up, all up front. So they give you like, okay, here's 50 grand, here's 50 grand after a certain part, and you keep ordering inspections until you completely get to a point. I think it's like 75%. And once you get to 75% of the bill, they will just release all the funds to you, but they manage those funds until it's done. So a lot of people think you just get a check and you could do whatever you want. No, you got to go through. Just because the insurance company pay you, you might have to go through your mortgage company. And even with that being said, if the property is paid off, then they still, your insurance company may still, even though the insurance company still may require you to rebuild, because that's what the funds are for. They're not for you to pocket or just say, hey, I'm gonna sell it and move somewhere else. They still may require you to rebuild. So it get really tricky, and it's really bureaucratic when it comes to, trying to figure it out. So sorry if I talk too long or not, but I just want to give you my experience.
Tony, what about you? Have you had any experiences that you have to deal with like the insurance companies, or what would you say like Ohio's market, like maybe what's the biggest hazard maybe that you got to be concerned about?
A lot of investors really only talk about a flood zone for us. But other than that, I think we've got it pretty good when it comes to just insurance. I think it's definitely on a cheaper side. Listening to everyone else talk about insurance, I think majority of my properties are about $75 to $80 a month for coverage. So flood zone is usually the only like major issues where if you talk about, hey, if it's in a flood zone, I've not had to buy anything or even looked at anything into a flood zone. I've been kind of feared out of buying in a flood zone. Like usually any investor I talk to in Ohio, like stay out of flood zone, stay out of flood zone. So
Right.
that's usually been the only thing that we've ever encountered that I've seen. There's like, hey, stay away from properties that are in a flood zone at all costs. Yeah. Other than that, I think it's pretty straightforward for us here in
Yeah.
Ohio.
Same here in Michigan. We don't really have too many flood zones as well. But yeah, just stay away from, especially if it's going to be a long-term asset. I mean, you just first big rain, or whether we don't get like crazy like tsunamis or nothing here in Michigan. I'm sure in Ohio you don't either.
Yeah. Yeah.
So yeah, but like if we get like a big flood or flood zone or whatever, we just stay away from it. Especially if it's going to be a long-term asset, you can definitely mess up cash flow or anything like that.
Well, Matt, this question was actually for Denzel, so Denzel can kind of touch on it after too. But Matt, does seeing like the wildfires in California, and even like you're talking about Denzel had a fire at his place, do you think this changes your views on the style of property you purchase, or the investment class that you're in?
I'm not sure. I'm not sure it's so much the style of investment property. I think you create a kind of buy box, and you have a criteria of what you're looking for, and you kind of hone in on that maybe niche. But for me, I think looking at this, it's like you're sort of like paying for like a peace of mind, right? Like insurance policy is a peace of mind if it's not in the flood zone, but you got flood insurance. Maybe you are paying for that peace of mind. What helps you kind of sleep at night. And I think, I don't know, these are maybe like, what, 1 in 100, 1 in 1,000 year, natural events and natural disasters that, sometimes, things are just out of your control. So like, what can you control almost? And it's the insurance policy, maybe it's an umbrella insurance, maybe, you're diversifying in different markets or different locations to maybe help hedge some of that risk that you incur. But the term that comes to mind is like, it's not a matter of kind of if, but when. And I say that to happen for like, not really insurance wise, but like going through an eviction process. Like, I feel like, it's not a matter of if, but when. You could do your best to vet these tenants and pre-qualify them and make sure there's 3-4 times the monthly income.
Yep.
Life happens, and people are let go from their jobs, and they go through some financial duress. And I only say that because we had tenants that actually just moved out on Monday this week. So they were kind of slow to pay their rent in November and December, and there was 4 adults. It's a 5-bedroom, 3-house property in Pensacola, and so I say it's not a matter of if, but when you get tenants that if you're in this game long enough, right? Like financial hardship happens, they lost their jobs, they're moving back into their parents with in Texas, and we posted that eviction 3-day notice. We could have gone through that eviction process, court fees, legal fees, etc., if they didn't, leave the premises on Monday. But thankfully they did, and they got all their belongings. But yeah, I mean, that kind of stuff just happens, right? Like, what can I do to control that? Not too much. So yeah, you just kind of play the game. That's just part of the rules.
I mean, yeah, I totally agree with that. I'm the same way. So, like, to answer the question, it's not the style of house or anything like that for me. It just, again, protect yourself as best as possible. That's really what it comes down to. As far as when I'm looking at rental properties, have your buy box, like Matt said. But when it comes to like evictions, that's another thing. Where you buying the properties at, the tenant class you're trying to get. But like you said, you can vet them all you want. I mean, I got tenants too that same thing, and you know, may be slow paying rent, or I try to work with them as best as I possibly can. But like the best thing to do, like, instead of like, and that's a popular thing, just like kind of like letting them know, like, hey, look, if you guys can just leave by this time, you don't free and clear, go ahead and go. It's best to probably do that than like go through an eviction. Now, if you got a tenant that just that's not responding to you, they're not even returning your calls. Obviously, I've been seeing a ton of stories where landlords been getting either getting in conflict with their tenants, or like people getting shot or killed, in that situation. So I try to stay away from that. But I'm gonna email you, I'm gonna text you, I'm gonna call you. You're not responding to me, then okay, now we have to go through an eviction process. But if your tenant is a responsive person and they telling you, they being transparent with you, hey, listen, if you can leave by next month, or I can even give you 60 days, I'll take 2 months of the mortgage by myself before maybe going through an eviction process where it may be got to go through court fees, got to get a lawyer, and you got to show up, they go to court. It's just time consuming, right? Where if you got a good relationship with your tenants, you can just let out. So I think that's a good idea too, Matt.
Just to kind of hit on, that was kind of one of my main motivators by doing that rent by the room model, right? Like, we just went through an eviction, but with us, it was a 3-day notice, and we had it ready in day 4 because they're attached to a room, right? Versus a whole house where I'm having to move all this stuff out. So that was like one of my main motivations by doing the room rentals. Also, for me, it was I'm pretty heavy into the homeless community and helping. So that was, like, again, my main focus. But for us, it was, how can we maximize this one house, and then 2, how can we minimize our tenant turnover, which again, it's only a room. We had, he started cleaning up. We had it, cleaned out. Day 3, he was out. Day 4, we had it clean. Day 5, we'll start to have someone in by next Monday. So that was kind of a really big motivator for me with that particular model.
It's a good way to put it too.
Just want to say good morning to Andy from School Community. He's a Ohio investor also. Got Jason here. Good morning, Jason. And we got the legendary all-nighter Hider here for stopping by. Quickly too, I just want to remind everyone, if they haven't picked up their shirt for the One Rental at a Time event in Vegas, fundraiser for the Blind Center. Old Guy REI is doing that. So here is the front of the shirt, and this is the back, and it says, "I found my tribe." So everyone, if you can, go check it out. We found out, I guess, the links may not work from your mobile device. So I don't know if that's a problem, but message me if you want to order some. And yeah. But yeah, anything else you guys want to touch on as far as maybe insurance or hazards, or Tony? I'm not sure. In Ohio, do you guys? So I'm assuming you guys don't have brush fires, probably wildfires, very much.
No, yeah, we don't run into any of the, a lot of the things that we hear And it's obviously it's, you know, you have your good and bad. Like I said, our insurance is definitely a lot cheaper. Also, listening to you know, people from California and all these, you know, places, it's like, man, insurance is just wow. But you know, you guys were talking about like, you know, how are you running your numbers with that in mind, really not knowing like it can go from this number to this number within a year and you not have any control over that.
Matt, you want to know?
Yeah, yeah, I can speak to that. You know, I think you know, you can conservatively underwrite it as best you can, right? We weren't anticipating or expecting almost you know, a 30, 35, 40% you know, increase with you know, natural events and you know, hurricanes that come through. And so, you know, I think you know, maybe after that first year, you know, as you're kind of, you know, maybe closing on the property, you find a place, you know, you're reaching out to an insurance company, you're getting a couple quotes, you know, they're kind of in a ballpark, let's say, you know, 8 to 1,200. It's like, all right, let me use 1,000. And, you know, how do my numbers work with 1,000? Do they still work with 1,200, you know, kind of on the upper end of that range? And then, you know, sometimes after that first year, second year, you might have to just reallocate like, hey, maybe I need to build more cash reserves. I wasn't anticipating insurance to go up 20% in this market. You know, how can I, you know, maybe readjust my strategy? Maybe I don't buy as many properties in said area. And that's something that we considered is like, you know, we like this little market here in New Orleans. But if interest, or sorry, if insurance is going at the pace it, you know, it's increasing, you know, we were looking at try to do like a kind of live in flip property. We were here
Mhm.
till 2027 with you know, our military orders. And you know, after we're looking at the numbers, it's like interest rates between you know, 6 to 7%. Insurance is going to continue increasing with the rate that it has been on this uptrend. You know, it probably doesn't make sense for us to get another property here in New Orleans. And so we kind of pump the brakes a little bit on pursuing a deal like that. Just like you said, I mean, we weren't anticipating such a significant increase. And so with that said, you know, we might have to, you know, look elsewhere, asset class, new market, you know, maybe it's just kind of maybe stabilize the property versus maybe stressing ourselves too thin.
Nice. Gotcha.
Yeah, for same here. I think, you know, again, what Matt said, as far as having reserves, being prepared that it, you know, possibly go up now. I think 20 to 50% is pretty high, especially in my market. And I would assume probably in your market too,
Yeah.
in
Yeah.
Ohio. But again, and obviously tragedies happen. I know everyone is probably going to feel the effects of the California fire in some capacity, even though we are all in the Midwest. But what I will say is that, you know, I usually kind of have an average in my head of what insurance is going to be for the properties that I'm looking at. So having that buy box is probably good to have because I kind of already know, all right, it's going to be about, for us, is, you know, the houses I'm looking at, it probably range from anywhere from $1,200 to $1,500. And then obviously on my duplex, it's probably $2,500. So I'm kind of like already knowing like what that is when I'm running my numbers. I mean, the main thing, the insurance is really not the problem. For me, at least when I'm running numbers, the one thing is property taxes. I think, you know, I'm introducing that. That's running those numbers and, you know, basically making sure you know what the property taxes is going to be. Because I think a lot of people, when they, you know, especially if they're a new investor and they don't know about like homestead or non-homestead, you know, usually when you're buying these properties, I say if they held by a property owner that's been there for 20 to 30 plus years, you know, them taxes are gonna be really low. So you buy it, you think you probably getting the most amazing cash flow ever, right? And I kind of got stuck with that too before. But when I saw, I learned basically like, oh yeah, like great, my taxes only, you know, $1,600, $1,200. Then that following year and a half, it goes up, and then it shoots to it get reassessed, and then it shoot up significantly, and that will swallow your whole cash flow right there if you go for cash flow in that sense because you know not knowing that, so learning that and now knowing this is the situation, and luckily it was my duplex when I learned that, so it really didn't bother me much because I was just house hacking anyway, so I was good. But like now I'm buying my single families, and I'm like, okay, now I know, you know, I got to prepare for this, got to put these reserves here because now when I
Mhm.
already knew what my taxes was going to be, I just paid the taxes shortage, and I was fine. My payment went back down, so I think that was my big thing, but not too much with the insurance.
Oh, Tony, before we move on, Andy, like I said, I know he's investing in Ohio. I believe he lives there also, but he says his current house is Jackson, looking into Seabus area. I'm not sure if that's familiar to you or
Yeah.
uh,
Tell them I'm in the Cincinnati. Columbus. Okay. C-Bus.
okay.
Okay. Yeah. Columbus. Okay. Yeah, that's about a 2 hour. I've got a brother that just moved up to Columbus area. That's a hot area right now. We've got a lot of out of state investors coming to Columbus. They're doing a lot of building, a lot of construction right now over there.
Yeah. Okay. Well, is there anyone that wants to throw in their thoughts on the wildfires? If we want to dig into that, on their thoughts on, what may have happened, what could have been done, or do you guys want to move on to something else?
Uh, the last thoughts. I just think that it's a tragedy. With the wildfires, I think there's a lot going on politically, which I'm not on either side. I'm just politically, it's been bad. Bad look. And California was having these problems before. There was I hope wish they was just better prepared in that manner. But I hear the insurance companies with like 3 months they dropped like I forgot how many people, like 78,000 policies. I don't know if that can be accurate or not. I think I seen something. I was just scrolling on Instagram, but they dropped so many. And a lot of people are paying out of pocket. And then I was hearing them actually talk about property taxes as well, because they said the properties that burned down, I guess they're gonna be reassessed immediately. But the problem is that the land in California is so much more than the property itself. And I think they said it was like 2/3 of the price of the house. So basically, they're going to reassess the house to zero, but the land essentially is still, let's say if the property is 30 grand, and they still gonna probably pay what $23,000. I mean $23 million. That's at 30 grand. I meant 30 million. And then now they have to pay $23 million still on their property taxes, and just cut the house just cut off like 7 grand of it. I mean, that's not that's not helpful at all. So
For sure.
it's
Yeah.
pretty bad.
Yeah. Not to mention, right, like, having to relocate your family and try to figure out where you're going to be living. And then you got the insurance policy pretty much just kicking you while you're down.
Exactly,
It's
exactly.
it'll be crazy. I don't know the exact details, but I know you guys, I think we hit it earlier, but like, permitting and policies, like
Yeah.
how long it's going to take to rebuild. Do you guys know, or have seen anything of like, I could only imagine the red tape and the process it's going to take to rebuild houses
Yeah.
in certain markets like that. Have you guys have any idea on what that would look like?
I mean, I think that. Oh, go ahead, Mark. You saying something?
No. I mean, I'll just throw. I mean, I'll let you. I'm here for you guys to talk.
Okay. Yeah.
If it was.
Well, I was just gonna say then. I haven't heard too much about it, but I do know that it's probably going to have to do something with the government is going to have to come in through and try to facilitate this, local government, state government, because it's going to be one of those things where the permitting process was already long, as I was hearing. It was already a long process to even get like a freaking pool and install in your property if you try to get a permit for that. But now I think that the state government is probably gonna have to come in there and probably try to fix that. And a lot of those properties on Malibu and like on a PCH Drive, they were grandfathered in. Like a lot of these houses won't, maybe they will let them rebuild. But if it's grandfathered in, they can't rebuild. They're not gonna be able to rebuild those properties. So it's just gonna be a lot of things that the government's probably gonna have to put like like they're gonna have to put some sort of laws and policies in to help these people get back to rebuilding their house, because California, if anybody has been there, is huge and nothing is close. So if these communities are burned down, a lot of people are gonna have to go to different cities, which might be 45 to an hour away just to get to it. So yeah,
Yeah.
just be
Yeah.
careful.
Watch out that Las Vegas market, right?
Yeah, that Vegas market, the Arizona market, it's crazy. It's gonna be crazy.
Yeah, I definitely agree. To a lot of that. I think the one thing I'm going to be interesting to see is, like you're saying, if it's going to be expedited or if the government's going to step in, because I think it's also going to I would say that this is probably a wealthy neighborhood in a sense. You look at property values, and is it going to be looked at as if favors are being played, right? You know, the government stepping in to help these rich, supposedly rich individuals based on property values to expedite things. Because I don't know if you guys follow, even like Bill Maher, his you know, he was talking about how he was trying to get solar installed, I guess, on his place, and it took like it's like a 3-year process, and he still didn't have it built, and it's just all this red tape and stuff you have to jump through. And now, you know, you're trying to build these communities, and is it going to be something that, you know, are they going to expedite things? But now they're going to be looked at as like, oh, why is this neighborhood getting this treatment? Is it because, you know, their properties are worth this much and whatnot? So yeah, it's going to be some interesting times. And, you know, even talking about property taxes and things like that, I was also hearing, you know, like the California Proposition 13 for their property taxes is something interesting, you know, because it caps property tax increases and whatnot. So that's also a way for, almost in a sense, where property values are somewhat, you know, manipulated in some sense, right? Because you know, the values are going to be high because the government, you know, the states are trying to collect their property taxes, so values are somewhat increased because property taxes are on the low side in a sense. So for them to collect more, the values have to be higher, and things like that. So it's going to be some interesting times for California, I definitely think. Let's see, Troy, thanks for stopping by, man. He says California government puts so many roadblocks out of sake of extreme safety measures, ridiculous bureaucracy. Yeah, I totally agree. I'll have some 2 cents on that if things start slowing down in the discussion. You guys want to talk about anything else? Or I know Tony wanted to talk about maybe some wins and losses, you know, in
Oh, okay.
2024, and maybe what looks like for 2025.
Gosh.
What? So, Tony, you want to maybe talk about some wins and losses for 2024?
Yeah. I started getting into journaling, and I was that guy that was like, man, I ain't gonna journal. Like that's not
Yeah.
cool, right? Like just growing up and things, you know. But as I started to journal, like I started to you know, really have to step back from social media as what I had going on, and kind of that looking at other people and where I thought I should be and where I was totally you know, separate, right? So, you know, I was had my goal of, you know, getting one, you know, I was super happy with that. And then it's like kept moving that goalpost. So I kind of had to really kind of go back into my journal as I was like, oh man, I'm not where I want to be. Then I look at my journal, I'm like, man, I was happy getting that first one, and I was
Yeah.
happy, you know, getting that second one, and I prayed for that third one. And then I got 2 more, and I'm just like, what am I doing? So I've had to um really dial into my journal and making sure that I'm looking back and not just continuing to write, as it gives me a kind of a sense of where I wanted to go and where the things that I accomplished, but in my mind I didn't accomplish because I'm looking on social media and seeing other people and where, you know, the numbers that they're getting. And then, you know, even dialing into like, is that something I even want, right? Like I had to have a, you know, a really good meeting with my family and kind of realize like, what do we want? You know, what are we trying to accomplish out of this? And is our goals matching what we want? And realizing like that I don't want a big because I want to self-manage, because I'm kind of playing the long game where once I retire, then I'll, you know, kind of go into real estate full time. So realizing that I don't want to have this big, you know, portfolio kind of has really made me dial into that journal. Hate to keep talking about that journal, but it's been a game changer for me mentally. Dialing into that and looking back and seeing where I was and where I wanted to go and actually accomplishing them goals, taking my time to really, you know, cherish those moments and not continue to move that goalpost.
Well, you better not let the guys at your station find that journal, because you know there's gonna be they are
Right.
gonna
That's
they're
it.
gonna
Yeah.
blackmail you or write some
Hey,
shit in there.
you know what's funny is like I'm that guy now, like where even like them guys, you know, obviously, you know, they're making fun, but it's a good fun. But like I'm starting to see they're picking up on some of the things I'll talk about, because I'm pretty strong about investing. I'm pretty strong about real estate. I'm heavily involved just talking about real estate because we got a really good pension, and a lot of guys get stuck on just paying in their
Yep.
pension, and then they realize it's not enough, and then they're either having to go back and work, and you see them and they're retired, but they're working harder than they did at the firehouse, and they were ready to get out quick. So I've been talking about it heavy, and I'm starting to see guys mention things that they were totally against before, which is now allow me to realize they're actually, listening, even though they're kind of making fun and kind of throwing their jabs. They're actually listening. I just got to continue to, share my wins, but also share my losses. And even with my losses, they are understanding, because I'm pretty open with, like, my contractors stole money from me. Like, I'm pretty open with them things, because obviously they see the Instagram part, like, man, this guy made all this money. I'm like, but you got to look at the back end of it too. So it's been cool these last couple months of them really like sharing and wanting to know more about different stuff when it comes to real estate.
Troy and Hyder are trying to get me riled up and get me canceled or get me going down this path.
Dude,
But
it's your perspective. You're a firefighter. This is kind of your wheelhouse, so to speak.
Yeah, exactly.
what I will say about it is, I think a lot of it is, if it wasn't, I'm not saying all of these things are true or these conspiracy theories are true, but it's the fact that you could see it being possible. Like when they say, like, I know I heard this story, and I'm not completely sure if it's completely accurate, but I did see the same stories that Troy talks about, of how, like, out of state crews were coming down to help,
Yeah.
but they had to go through emissions testings and things like that before they could actually help. And like I said, I'm not sure if that's completely accurate, but the fact that it's California, and they have all these regulations, so in your mind you can partially think, like, I could see this happening, right? And I think that is the issue, right? I mean, you know that it could actually be a possibility for California to do something like that, and that's the biggest issues or concern, kind of, with this whole situation, as far as, like we're talking about, government overreach or government overstepping. But yeah, I mean, anyone else want to talk about 2024 wins, losses, before we get into Trade Better's question here?
Yeah, I mean, same here. I like that you're doing a journal. Uh, Same here. As you see, I was literally at the table writing down my goals and things, trying to be grateful for and stuff like that. It's been a last year was a crazy year. So I'm kind of like in a standstill, and unfortunately, because I'm just trying to manage this bill in the back and making sure it's no unexpected expenses or something they don't hit a power line or a gas line, and I gotta renew a line or something like that. Just preparing myself for all the things. So I kind of been on a standstill with my reserves, and I'm ready to disperse and I'm ready to buy more. But I'm just trying to make sure in the process I'm preparing myself. Reminding myself that I am blessed, to be alive and be here, because I know in California it's like, I think last time I've seen it was like 26 people that was killed from a fire and such like that. So just trying to prepare myself. And then, like you said, I was so excited when I first got the first one, and then I was excited when I got the second one too. So just want to continue to know that I'm doing what I'm supposed to be doing. I'm preparing myself, and even that I'm not buying right now. Like, again, you still could be studying your buy box. You still can be networking. You still can be doing things that proactively help your real estate career too. So I think that is good that you're doing that. And yeah, I'm just you got to take the wins and losses and go about it, because in real estate, like, again, I have contractors running over my money, and I have had people not show up when they said they would show up. I have tenants not pay rent, or I've had to deal with tenants, like, again, what Matt was saying, losing their job or losing their job, so it's just a lot that comes with it. People don't see. They see, like, you got the rentals and you're doing well financially, because you should, if you're buying rentals and stuff, but it's a lot to go with it. It's not just like easy or at all, it's really a mindset thing, keeping your mind fresh and, and making sure you stand positive about everything. Because you can look on social media and be like, oh, well, yeah, this guy got 100 rentals, and I only got 3, or only got 4, or only got 5, or only got 10. It's always going to be the next bigger guy, but you got to be happy about what you got in your portfolio and what your goals are. So I think it's important.
Yeah. No, I kind of echo what Denzel said is, being grateful for the kind of house and the bed that you made currently, right? You can always go on social media and see the flash and what might appear nice, but you never really know what people are going through. And so I think, a big win for us is just kind of, being okay, taking a step back and doing some of that, reflection, like, Tony's doing, whether that's journaling or reading or kind of reflecting on what got you to this point, right? Like, 'cause it was like kind of your old self, like doing the daily discipline of, doing a buy box, reading, learning something new, running the numbers, like getting back to, what you can do in a day and just control what you can do to win
Mhm.
that day. And I think for us, it's just like, we're set up on this path. Just keep going, right? Like, you've hit these milestones, but you're going to keep moving that goal and that benchmark forward. So for us, it's just to continue pressing on, really.
Yeah, Denzel made a great point. Like, I think it's, like, you're just trying to accumulate assets right now, right? And you're trying to, learn from mistakes we make. We're always going to have struggles. We're learning from other people's mistakes. But I think, I hate going back to it, and it's a very unfortunate incident. But like the wildfires in California, it kind of puts in perspective, if all your wealth was into this one asset, right? If all your wealth was in this one home that you may have owned, even if it is free and clear, right? Now what are you going to do, in a sense, right now? You may have to wait for the insurance companies, like you're saying. It's not your fault, but yet now you have to jump through all these hoops with the insurance companies. And what are you going to do in the meantime if
Yeah.
you don't have this property? So I think it's just like it's like what we're all trying to do, right? It's just accumulate as many assets as possible. We realize it's a mindset. It's not going to be easy. There's going to be struggles along the way, but it's kind of just figuring things out, as we go, right? But I also want to reiterate, I do not have a journal. So I don't know about Matt. I don't know if you have a
Mhm.
journal. Um, but
It's
yeah.
a Apple Notes app on my phone. You can
Yeah,
call it that.
that's a journal, digital
Yep.
journal.
Yep.
I use that too.
Let's see. Trade Better did have a question over here. I may have skipped over one, but here's one. Tony, how do you deal with evictions as a self property manager? Do they go easy?
So again, kind of with what I'm doing, I'm dealing with government agencies, and because they are on like a voucher system, a lot of times, like with this one, I didn't have to go through an actual eviction. I just gave him a three. I was able to give him a 3 day notice because we documented all the issues we were having, and because of the voucher, we were able to have just where it was like if he didn't get out by that 3 days, we would have had to kind of take that next step. But I kind of been able to kind of threaten them in a sense of like, you guys got to do better because he has a caseworker, he has all these different services. So it was like, hey, you guys got to do better. And if not, then I'm not going to continue to work with you, because if this is how things are going to go, when we know most of these guys got mental issues, most of these guys got behavior issues, all these different things. So they were understanding, and it's kind of a cool thing because most landlords, like the average landlord, is not doing this model. Like, you've got to actually care because it's so more hands-on. So they know that, because obviously with for housing affordability, it is a disaster right now, especially in that specific demographic. Like, no one wants to rent their whole house or single apartment to a lot of these guys and females. So for me to come in was kind of like a godsend, and I kind of play that to my advantage because I do have things in place to kind of prevent these things, but they're not doing what they're supposed to do because the caseworkers are overworked. So I do more than the average landlord. So they were obviously understanding, and we were just able to give him a 3 day notice just with paperwork. And he got out. Like I said, it was so I didn't have to go through the actual eviction yet.
And I think it just being prepared, right? Making sure that you got reserves put up for a lawyer. You have a lawyer that you like, and you write, and you do that work ahead of time, where you're not scrambling to find just some average Joe on the street, and then just making sure that if you got your reserves and you know you go through an eviction process, you have to go through it. Luckily, I have not had to go through an eviction process yet. I mean, it could happen. You know, investing in this, I know that's part of the risk, but just being prepared. You know, knowing that it could happen at any time, and then again, one of the things I like to do with self managing or just knowing, just think it's important to like create that relationship with your tenants. I think it's really important. That's why, you know, if you go through a property manager or so like that, you might meet or a bigger company or so, you know, they're going through a company. It's just, you know, they're gonna respond to them the way they respond to them. They don't gonna care, but like, you know, I make sure I care about my tenants. I'm checking in on them and seeing how they're doing. Ask them if they need anything. When you know when communication is established at some point, if they say, hey, toilet's not flushing. Oh yeah, well, how's everything else? Everything else is good. All right, great, good. You know, Happy New Year's. You know, Merry Christmas. You know, I'm keeping that relationship so that way they know I'm just not your landlord. I'm a person that you know has bills and responsibility as well, and you know we can communicate. You don't have to ditch me for a week and not talk to me or be scared. You could just say, hey, look, you know, I'm going to be behind this month. You know, can I pay you in 2 weeks? That's fine. If you long as you communicate with me, I'm fine with that. But again, I think creating that relationship with your tenants is super crucial, and then setting the expectations up front too. You know what I mean? When I'm giving my leases out, I don't just do a digital lease where they sign and stuff. I meet them at the property. I highlight the most important things I want them to see and know, what I'm responsible for, what you should be calling me for, what you should be responsible for. I make sure it's all written out so they can't say we never talked about it, you know, and then I have them sign a digital copy, I print it out. So just establishing those expectations up front on what I expect them to do. And then, you know, that's how I kind of avoid that. Hopefully, I think I'm doing the right thing. But again, obviously, it could still happen to me. So, yeah.
All right. Well, I've been trying to do this recently also. I've been trying to find some interesting either posts on Instagram or X tweets and whatnot. So I've been trying to share it and throw it out there randomly and see what your guys' thoughts are. And I think this is a great one from Alex Hormozy, especially hopefully after these California wildfires, or it's kind of big news. Hopefully people don't get too scared of investing or putting their money into assets. So Alex Hormozy says a big reason many don't want to make big money later is they spend too much money now, or so when big opportunities come, they can't take big swings. Because their house, car, lifestyle costs too much. It's kind of you're playing defensive right now in a sense. So I think that's kind of my take, on what he's saying. As far as now these wildfires, people might start just saving money, and they're like, oh, I don't want to invest in real estate because look what can happen, what kind of hazards there is, right? So do you guys think that's going to be a big issue maybe coming up down the road, as far as people just kind of parking their money in savings accounts for now?
That actually came up last night in a conversation. I was at the firehouse. Again, I'm the only one that's kind of heavier into real estate. And the guy started to talk about that, but I can was able to kind of pivot to them being in the stock market, and when the stock market tanked, and we had a bunch of guys who ended up having to do extra years because they lost so much money because they were still at that higher risk. So it was kind of cool for them to see, like, I'm kind of all in with real estate, as even though these things are happening, eventually real estate kind of comes back and the values come back. Obviously hindsight's 2020. It's hard to discuss that thing that's happening in California. Obviously, we can Monday night quarterback is what we call it. We can Monday night quarterback what if all day, right? What if this happened? What if that happens? But I'm more of kind of that locally talking about if something was to happen here and I lost everything in that house specifically. That's why I'm diverse. Like, it's like if all my properties went up in fire, I lost them. Everybody's dealing with a lot of the same issues versus, like, things that are happening. So it's hard to really to quarterback that, right? Like, it's kind of hard to really say, what if all these things happen and now you lose all the value in your houses if you're diverse. So I struggle with that specifically, because it's like you can what if all day.
Well, for me, I definitely lost everything. So I could definitely speak to it on that manner when it comes to fires. Obviously, for everybody, like in California, is different, but literally, I lost everything. Everything I ever owned, any keepsake. Uh, everything, right? So I'm literally starting over from fresh, and I'm only 5 or 6 months away from it. So with that being said, I think parking my money in real estate was the best thing that I possibly could have done in this situation. I had options, right? I had tenants in my main house. They were, angels enough to, you know, leave my property because they understand the situation that was going on, and I was able to move into this house, right? And then I had another house where my lease was up, or well, lease was going up in like 2 or 3 months after, and I could have moved into that property, or I could have sold the property and got my profit back and profited from obviously the appreciation over the years. So I had options with having rentals and having parking my money in that, unless me, if I lost everything and then now I'm really just stuck and now I gotta get an apartment or find another house to rent, or at my point I was living with my in-laws for 5 or 6 months. So I don't think it should help me stop anybody from investing and having multiple rental properties. I think it just provides more flexibility and options. Yes, it does get stressful, but honestly, my tenants were paying and never missed a payment, which still helped, right? Where especially because I was house hacking, nothing really changed for me, really. I just lost the house, but I'm still getting my main house was still making money, and my other rentals was making money. So I mean, my income didn't change, so I would still be able to stay afloat there until insurance started to kick in, right? So nothing really changed for me, and I'm blessed to say that. But again, I don't think that should stop anybody from investing into real estate. I think it just makes you a little bit more flexible, and you can, if you need to sell something, you can if you need to, So at least I like having that option.
Yeah. I think like with Alex Hormozy's message and the idea of like just having options, I think you can, try to go as long as you can, without that lifestyle creep. Just because you made a couple $100s in cash flow, as we all know, right? Insurance policy next year comes up, there goes that cash flow, right?
Right.
So I try to, not try to, live below your means for as long as you can, as long as you can sustain it. And, if you got a significant other that's on the same page, you're still, like you're talking about, these are their goals. Like we're going to continue on this path, because we have something better that we're working towards. I think as long as you have that, that's at least kind of what our experience is, and try to live below our means as long as possible. And then, like you said, opportunities that come up, you have that dry powder or that excess cash that's not locked up in a house in XYZ that you can't, liquidate easily. I think that's where you'll find a lot of opportunity.
Agree.
Yeah, I think a lot of it, like you guys all touched on, it's about just having options, having multiple pieces on the chessboard or the playing board, right? And I think one thing to look at is, as bad and as terrible as these wildfires have been, right? I think the big thing too is you can diversify. You can diversify in one market, right? You can invest in California, but it doesn't mean you have to be in the same zip code, or all your properties have to be in that same area. So as bad as the wildfires have been, if you were different properties across California in a sense, you would be somewhat safe in a sense where maybe this particular property in this area, yes, it burned down, but you are diversified in that one market. So I think that's the one thing, or one good maybe takeaway is that, some people get so caught up in diversifying in different asset classes, whereas you can invest in real estate and yet still be diversified based on what zip code or what area you're in, right? But yeah, I mean, we've been going for about an hour. I like to give you guys the option, I don't got much to do for about 10-15 minutes, so if you guys want to stick around, if you guys got to bounce, you can bounce. But anything else you guys want to talk about on the top of mind or whatnot?
It's pretty much everyone like in this are kind of into real estate already, that are probably on the live.
Yeah, I think that's maybe what we kind of focus on, but I
Gotcha.
know other people probably are investing in other assets, like probably some crypto, Bitcoin. I'm sure
Gotcha.
people are doing stocks. People are doing, like Matt has some short-term rentals. Denzel is a real estate agent also with EXP, and he also does coaching on the side for passing your real estate license. And you, for example, you have something else you want to talk about, what your other business is or your entrepreneurship.
Yeah, I've got a I do youth speed and agility strength training.
Oh,
So I've got a facility locally that we do a lot of mostly volleyball specific plyometrics. I did all sports, but kind of started to niche down. So with that, kind of came to kind of the social media following. So we started kind of really dialing into social media. So we've got like an online program for our programming for volleyball specific speed and agility plyometrics. So I've been kind of dialing down that rabbit hole of, doing the online thing and really seeing why and how people get so caught up in social media and being on there and posting, because I'm starting to get to the point where I am starting to make a little money off of it. And it's like, but it demands so much of me being on, me posting, me engaging,
Yeah.
and it, always comes that time like, is it worth it? And then you get a little check through PayPal. You're like, well, it is worth it, but then you start to again, so it's tough in a sense of like it's cool when it comes, but there's just so much that comes with it, and I can see why people get so caught up in dealing with social media. But man, social media is so phony, man. It is so phony, and it's so funny because even like some of the people that I know that I end up, either they reach out to me because they're, like, hey man, how did you get your following up so quick? And I'm telling them, and then they give me the real story, and I'm just like, that's not what you're posting. Like, I literally go on your page, and it's like all this false information because they're wanting you to buy something, or so it becomes, man, I'm so guarded when it comes to how I feel about social media, because I see so many people getting caught up in looking at people's social media and either feeling like they're behind, right? Because again, most of us are dealing with real estate, but like before I got into real estate, I did not know very many people who were investing. So it was like this whole new thing for me when I came into the investment world, where I couldn't go to such and such and talk to them about real estate. So I'm still kind of on this island when it comes to like investing locally, where I've got to now go outside kind of that wheelhouse of people that I know, because most of people either had one bad experience, right? They got in early, and they didn't do it right. They wasn't really investing. They just bought a property because they was able to buy it for 10 grand. Or they hear the story of someone who didn't do it right, and now they're so detached from like, dude, that's not what it is. And I'm like, man, it's a whole different world out there. And then they'll see something on social media. So I get pretty guarded when it comes to like social media and like people what they post.
Yeah, I mean, I would agree. Social media is very foamy. I try to use it to my benefit in some capacities. I've made so many contacts that I probably would never have with getting into it. So I'd say that's one of the things, Tony, you should probably look like, definitely like you look at we all here now. So I had met so many people through social media, loan officers that I currently use, agents that I have, that I networked with and or maybe had opportunities. So I try to use it as a tool to just obviously build those networks, right? And then obviously I do the tutoring on the side or and coaching and such like that, which kind of comes natural. So it's one of those things that I kind of just try to use to continue to I guess built my network of people that I connect with. So I think, but yeah, other than that though, yeah, I mean, I'm guilty of charge. I look on other people's page and I'm like, man, look at this person. Wow, this. I mean, half of the people on social media don't even know I've been through a fire. It's not for them to know. It's not something I like to talk about unless I'm on a platform like this.
Mm-hmm.
Like, everybody understands and we get it because we understand what's going on. But you know, they may see mine and be like, "Oh wow, this guy's building a new house. Wow, can't believe that." But they don't understand what I've been through to get to just do that, or how much money I'm putting to do it, and like the time it takes to do that, right? So I kind of just like use it as that it can help me benefit myself. That's how I kind of look at it.
Definitely agreed. Yeah, use it as a tool, fits your lifestyle, fits your what you're working towards, and
Yep.
I think certainly you can get caught up in it, but yeah, just another tool in your toolbox, right? Trying to
Yep.
build your journey and build your I guess your wealth as well.
Well,
Yeah.
Tony's being a little modest because if you got, I forgot his links, but if you want his links, go check out my interview with him. That's out on YouTube. But I believe his speed and coaching one is what 150K followers, I
Yeah.
believe.
Yeah.
Yeah, so he's being a little modest out here. He has a
Yeah,
bunch of
yeah. It
That's
sounds like he's being
legit.
modest.
Yeah.
yeah. But I did forget to tell Tony before we hopped on that there's no filters here. So if there's anything you do want to say, you can cuss. I mean, like if you want to make fun of Detroit losing this weekend to the Commanders,
Hey man,
we can
I
talk
love
about.
that's how
Oh,
that's how we need to end it.
you
That's
know
how we
what?
need to end that live. I respect that, Mark.
I
My
forgot.
man.
I forgot. Matt is a Commanders fan. So
Yeah.
both you guys are gonna end in a tie.
Oh,
Then.
Matt is a Commanders fan?
Yeah,
Matt?
I forgot
Oh,
about that. Oh, you know what?
Hey, I was originally a Redskins baby, born in that area.
What do you mean? I changed my tune then because the Bears season went downhill after that damn Hail Mary against the Commanders. So I want the Lions to win. I changed what I just said. I want to.
Thanks, Mark. I appreciate it. I appreciate that. Yeah.
Hey,
Definitely,
Mark flip flopping like he on Instagram right now. Right?
Well, until you guys change your name back to the Redskins, I'm not cheering for you guys.
Oh my gosh. Well, yeah, we're going to definitely win. Definitely gonna probably by a couple touchdowns, Matt. So don't hold your breath too much.
Any given Sunday, baby. That's it.
We'll see. Well, thank God the game is on a Saturday then, right?
Oh, that's true.
Dang.
Yeah, it is.
All right. And there it is.
So yeah.
All right. Well, if you guys got anything else, throw it out there real quick. But if not, this was a fun one. And yeah, I mean, we'll get you guys all back on again. And thanks for always doing this, fellas.
Yeah.
Thank you.
Good to meet you, Tony and Denzel.
Yeah, appreciate it, fellas.
Do it again.
All right, everyone. Have a good day.
All right,
You too. Thanks.
See you.
Right,
Thank you.
bye.